Equity markets are not just numbers. It's about stories. It's about all sociology, psychology, history, philosophy. So all the world comes together in one thing, the price of some. So I think quite a bit of challenges and philosophical questions come with this huge potential. But it is almost like playing God at a certain moment in time. But there is a risk to playing God. If you can start to change the DNA of stuff, you can bring mammoths back to life if you want, or dodos. So there are a lot of philosophical and deeply human questions that are attached to this new technology. And what we're living through, and also with Donald Trump and then what you see all over Europe and in the rest of the world today, it's clear that we're in a fourth turning. And what's a fourth turning? Well, unfortunately, because this is not a happy story, in the short run at least, a fourth turning is a period of very big conflict, wars between countries.
Hello and welcome to the Achieving Alpha podcast. My name is Steven and I am the host of the show. Today, I'm delighted to be joined by Philippe Gijsels. He is the Chief Strategy Officer at BNP Paribas, and he is also the author of The New World Economy in 5 Trends. Welcome to the podcast, Philippe. How are you?
Fine, and thanks for having me, Steven. Delighted to be here.
How's everything in Belgium?
Well, it's raining, as that's usually the case. So if you want to talk climate change, well, it has been raining for a couple of months now, same last year. So yeah, we get quite a bit of rain. There's maybe one country, that's Ireland. They have a little bit more, but for the rest, I think we're more or less the champions. And maybe today we will have a new government, so we will have to see if you want to talk geopolitics, that's something we know something about in Belgium as well. So yeah, but for the rest, it's almost weekend, so that's good news.
Yeah, typical European weather, in the winter.
Yeah, more not too cold, but a lot of rain.
Excellent. It's really great to have you on the podcast today. I'm really looking forward to our discussion. We got lots of things to talk about. Just before I get started, I just want to say well done and congratulations on your book. It's a really great book, and I think a lot of people can learn a lot about different areas from your book. So congratulations on that.
Thank you.
So today I'm going to be going into the 5 different areas of your book, which you outlined in the 5 different trends. But before we get started, I'm always interested to hear a little bit more about your life growing up and how you got into investing and where you get that drive for investing and that enthusiasm.
With me, it came already at a very early age. My father always worked for, another bank in Belgium. And we already discussed equities and futures and options and so on over the dinner table since I was very young. So, and then after a while, I think I was at the Belgian coast. I don't even think at that moment it was raining for once. And then I realized, and I started looking at stock charts and stock tables, and that was way before the internet was there. And then I started to realize, hey, this stock is at $20 or 20 euros, or back then it was still Belgian francs. So there was no euro back then. And I thought, okay, if you can buy this at 20 and I can sell it at 30, well, I make a lot of profit. So I got really hooked on the idea that there was an whole new world of figures and money and so on that was in a way related to the real world that we were living in. And that's hugely fascinating. And I've been hooked ever since. I've been in this business for 30 years now. Strategy on all different asset classes, currencies, commodities, rates, equities, you name it. And now for 12 years, strategist for BNP Paribas Fortis. And then, as you can see behind me, and it drives the wife crazy, I strongly believe that equity markets are not just numbers. It's about stories. It's about all sociology, psychology, history, philosophy. So all the world comes together in one thing, the price of something. And if you can more or less get that right, well, you can be successful, or you can, in a way, help your clients. So that's how I got hooked on the stock market and on financial markets.
Yeah, it's always great to hear the stories about how people get into investing. Obviously, you got into investing very young, so you had a kind of a real early taste for it. And yeah, there's always lots of different reasons why people are getting into investing, but they always say what drives you to start something kind of shapes you for the rest of your life.
Yeah, absolutely.
Okay, and what motivated you to write your book, and what was your thinking behind writing that book?
Well, I've written it together with my co-author 𝗙𝘂𝗿𝗄𝗏, who is the chief economist of the bank. I'm the chief strategist. We're good friends. We tour a lot with our book. We do a lot of presentations. We talk a lot on podcasts and national, international press and so on. And the initial idea of writing the book was that we thought that the world was changing very rapidly, and we tried to understand it ourselves. And we see the COVID period as sort of a doorway to a totally new financial world, a total new world economy, like the title is, total different environment with way higher interest rates going forward, way higher inflation, probably much higher commodity prices, way more volatility. And yeah, what we do, of course, on a daily basis, we talk to investors, we also talk to companies, and we try to help our clients to position for this new world. So writing this book, okay, it's been pretty successful because we already sold quite a bit of them, and we were also, for example, in the summer reading list of the Financial Times. So we were very happy with that. But we have also written it a bit for ourselves to try to find a framework to basically understand this world better, and using this framework to talk to our clients. And in a way, it is now out about 7 or 8 months in English. A lot of things that we talked about, well, seem to be happening in the real world as well. We talked about gold going up, and we have a target of 4,000. People say, yeah, you're crazy, but bit by bit, we seem to be getting there. We talked about the geopolitical uncertainty. In my mind, we can discuss it later if you want. It was no big surprise that Donald Trump won, and that he also took the Senate and the House, because that's typically something that you would expect in what we call a fourth turning. And the fourth turning is a word that's been coined, an idea that's been coined by 𝗙𝘆𝗽𝗍. So our book is also a book about books. There are about 100, 150 books that we talk about, because we try to take all the great ideas out there and try to combine them in some sort of a framework. And yeah, and I'm happy that things are running as they are, because if you write a book for the next 25 years and after 2 months everything that you say is the absolute opposite, okay, you look a little bit funny probably, but up until now, and I'm going to knock on wood, things continue to develop in the direction that we think. And today I have even more conviction in a lot of the things that we've written than I had 5 or 6 months ago.
Did you enjoy the process of writing a book, and do you think that you might write further books in the future?
Well, thanks for asking. They always say it's hard and it's a punishment and it is hard labor or whatever. I really enjoy it, and I'm okay. I read a lot. I read already a lot in terms of research papers and dailies and so on for clients. So I've been able to use quite a bit of the material I've built up over the last 20, 30 years in the book. So clients will recognize things that we talked about in the past in the book. So in that way, it was not too hard. Now, in the beginning, I must admit, it's a little bit scary, because you look at a blank page and then you have to fill it. But after a while, the book in a way starts to write itself. And at the end, it becomes more complicated, because then you have too much material, and then you have to take out some, because you cannot write a book of 1,000 or 1,200 pages. So you have to just take stuff out, and that's difficult, because that's killing your darlings. To a second question, yes, I'm writing 2 books in a way. I'm writing a new book about trading, but trading in the very broad sense of the word, not only trading commodities or equities or options or whatever, but also trading in life, because even people who are not in financial markets trade all the time. You trade time with your family against the money you need to make. So you have all kinds of trade-offs in the world. That's one. And secondly, and that's maybe a little bit a primer, because I've never talked to anybody about this one, but I'm also writing a novel which is also set in the financial markets in a hedge fund. So that are 2 projects that are on the table. I don't know exactly when they're going to be ready, but yeah, I think this book has been one of the most fun things that I've ever done. So I have really a taste for more. So I'm certainly going to continue.
Excellent. And I think we just got an exclusive there on the Achieving 𝗪𝗈 podcast about your new book.
Yeah, absolutely. You're the first one to ask the question, so you're the first one to get the answer.
That's really good. All right, excellent. Looking forward to that one. All right, and I thought we'd go into talking about one of the first areas about innovation and productivity. And obviously, we've got this new AI technology. How can you see AI driving productivity in the near, medium term and the long term? And in what type of shape do you think that might be formed?
Well, I think, first of all, it's going to be huge. When we look back at this in 30, 40 years' time, we will put AI, it will be bigger than internet, it will be probably bigger than the personal computer. So I would put it in the ballpark of the invention or of fire, of agriculture, of cities, the wheel maybe. So things that have been huge in human development. So I think AI is huge. The shape and form is going to be complicated. Now, first of all, maybe I must say that, like I said at the beginning, we think that the world that we have or going to have is going to be way more inflationary and is going to have way higher interest rates. So the 4 other chapters, all the things like demographics, like the debt problem, like the climate change, the money we have to put into that, and so on and so forth, they're highly inflationary, but innovation has the potential to be deflationary, because if we increase productivity, we will increase growth, but we also will lower inflation. So innovation is a little bit the wild card. And the innovation, I think, has the potential to be more or stronger than all the other combined. So we have to keep a close eye on that. Now, this week, we had the 𝗙𝘂𝗂𝗿𝗁 story that was dominating markets all the time. We had one day that Nvidia went down 17%. They lost about almost 600 billion in market cap, which has been the absolute record that we have ever seen. So once again, prove that we live in a world where all records will be broken in terms of speed of a decline, of a rise, so we live in a world that will have all records broken. So that's one thing we have to be sure of. But secondly, I was once again not so surprised by the fact that all of a sudden you had a new company challenging the incumbents, and also that it came from China, because that would you expect that it at a certain moment would come from China. And what we've been seeing up until now in AI is really quite particular, because we have never seen it in financial history. What you typically see when you talk about innovation, and we describe that in the book as well, if you look at, for example, the automobile industry when it was born, or the trains, or the plastics, or the internet, or what have you, typically you have new companies. And new companies, they come to challenge the old leaders, they become the new leaders, and then you have what Schumpeter calls the creative destruction. Up until now, the leaders in AI, and then we talk about the Googles and the Microsofts and the Metas and so on, have been the winners of the previous revolution, the internet revolution. So up until now, we've not really seen new players. And never say never. It's always possible, because we also have never seen companies that are as big as an internet player, as these players, as a Magnificent Seven, have so much money, have so much engineers. So it could be that they take the lion's share of this new revolution. But that would be the first time in history, because typically you would expect new companies to come in. So we saw that for the first time. A lot has been written already the last couple of days about this. They talk about democratization of AI, and that's in a way what it is. It becomes maybe cheaper, it becomes more accessible to others. And to have this innovation change, we really need that, because we have to take this AI stuff out of the scope of only the scope of these big technology guys. It has in a way to develop or to spread over the entire economy. And if all companies start to use it at a more reasonable price, maybe, well, that will really create the innovation we're looking at. And okay, if you go back to my world then, because that's a world of innovation, but if you then go back to my world, the world of the stock market, that would mean that where money has been flowing towards the big names only in 2023 and 2024, and even before that, now money is maybe going to spread to other parts of the market. And that could be highly interesting, because then technically the market would broaden, more companies, more teams, more ideas, more sectors would participate to the upside. And I think that at the end of the day would be healthy.
Okay. All right. And in terms of AI, which 6 sectors do you think will benefit the most from AI increased productivity? And also, what do you think some of the downfalls and the potential pitfalls there could be with AI as it develops?
That's a very hard question, but I think industrial sector would come to mind. I think that the healthcare sector would come to mind. An example that a lot of people are talking about is with the proteins that are folded in a certain way. And it's very important to know how the folding is to be able to develop medicines to take on diseases, but also they have to kind of merge with these proteins. So before, it used to take a couple of years to map one of these, but with AI you can do this much quicker. You put it in some sort of an open source, you make it available to everybody, so it will benefit the entire biotech sector. So that's something that will clearly benefit. I think that also everything that's clean tech will benefit from that. It will probably speed up the development in the solar sector, for example. So that's going to help. And then a very important one, quantum computing, because quantum computing has also been a fairly big theme over the last couple of weeks, since that Mr. Wang of NVIDIA said, okay, quantum is probably 15 years away. All the appetite went a little bit away and these stocks came back to earth. But maybe AI can speed up the quantum process. But on the other hand, quantum is also a building block for AI, so they can reinforce each other. And then the question once again will become, and that comes back to the first question you asked about it, who will reap the benefits, who will take the lion's share of these profits? Well, then again, and I believe there will be innovation, I believe there will be new companies, and let's hope so, because we need them to have this productivity. But then again, the big guys are very well positioned because they have the money and they can buy all the expensive chips, they can do all the development, they can hire all the engineers, they can plow billions and billions of money into these new developments. So, but that are things, but maybe the question should be not who is going to benefit, probably who is not going to benefit, because eventually productivity will increase. But if you talk about the pitfalls, if you start with these AI agents, well, that will cost quite a bit of jobs. So I think that our structure, that's something we have to think about as a society real hard. How much do you want to interact with these new technologies? What do you want them to do? Because I can imagine in 20, 30 years' time, now you have AI is a large language model. You ask a question, you get an answer. But in the future, you will clearly have robots that will look like humans with artificial intelligence. And then we are in a story like Blade Runner or so on, the rise of the robots. So I think quite a bit of challenges and philosophical questions come with this huge potential. It's almost, now I have to be careful what I say to not shock the audience, but it is almost like playing God at a certain moment in time. But there is a risk to playing God. If you can start to change the DNA of stuff, you can bring mammoths back to life if you want, or dodos. So there are a lot of philosophical and deeply human questions that are attached to this new technology.
Yeah, I agree with you. There are a lot of areas that we've got to be careful of, right? And they've got to have kind of intelligent regulations around them. But often the technological developments happen before the regulation, right? And then they work backwards.
And in Europe, we're very good at regulating, and there we have to be careful that we do not over-regulate, and that China and the US are not running away with everything, because that's a risk in Europe. When we're too careful, we miss this boat. And if we miss this boat in terms of investments or in terms of economic development, innovation, it could be quite catastrophic. So we have to find a good equilibrium, but nobody knows where it is.
Yeah, that will come in time, I'm sure. Okay, and Obviously, we had COVID a couple of years ago. It's getting longer and longer ago now. But I think that put in place a lot of technological advancements, and I think probably sped up the process of some of that adoption. Do you think it simply sped up the adoption, or do you think it caused it to start? So do you think it was going to happen anyway? It just sped up the time period?
Well, it was going to happen anyway, and we take COVID a little bit as a starting point of this new world, but it was a catalyst. It was an accelerator because these trends, also in geopolitics, also in AI and in productivity, they would have happened anyway, but they will probably have happened maybe at a small, not as fast a pace probably, but these things are yeah. I think COVID was very important, also for the shortening of the supply chain, of the maybe the end of just in time, more inventories. But these things would have happened anyway because you look at the world that is getting less globalized, or as we call it in the book, multi-globalized. It's not that it's deglobalization, but it's probably another way of globalization. And yeah, that is it's probably shorter supply lines, friendshoring. So a lot of things that we saw there, but also in technology and in other places, is clearly, yeah, would have happened anyway. But I see it as a catalyst, basically.
Yeah, I think so as well. It put things forward a lot quicker because everybody started working from home. Everybody was using Zoom for calls, etc. And there was just, I think there was just a lot more room for innovation. Yeah. Uh, Excellent. Okay. And I wanted to ask you about the term that you put in your book about hyper innovation. Can you a little bit explain that concept and what you mean by hyper innovation?
Well, we already touched a little bit upon it. So hyper innovation would mean that goes faster. So you have like quantum, you have AI, you have development in biotechnology, you have robotics, you have cybersecurity. So you have all very big trends. And we start the book basically because you have the 5 chapters who are the 5 things that you've mentioned and the 5 trends. But in the first 2 chapters, there are 2 additional chapters, we talk a little bit about what I would call under the hood. How do you look at the world? What's the way that you try to analyze things and so on? And I tend to talk a lot about libraries because we have to find a way to find knowledge. We have to look in research. We have to do our homework. That's a library. But the second one, the second very important window on the world, are the waves. I love the beach. I love the beach bars. I like being in a beach bar in the summer with a bottle of rosé and a book. That's my idea for a very nice holiday. So I like to look at the waves. But in our world, the waves are the things that we see on Bloomberg or whatever you look at your chart. So you want to see these very nice big waves developing. And I have a feeling that there are a lot of huge waves, tsunamis coming up at the moment. And all these waves are in a way interconnected. So that makes them even bigger. Like I say, in AI will have a big impact on quantum, but quantum will also have a big impact on AI, and so on and so forth. So we're at the moment, we're waiting, we're in the water, we're waiting for the surf to come in, and the waves that are going to come, especially in terms of innovation, it will speed up. It will speed up like crazy. And I think you made a very good point. Probably COVID, the crisis, always accelerates things. The fact that DeepSeek now has come in as a challenger to the West or the United States will create an arms race in not only the arms we talk about to fight in a war, but also in AI. You will have an arms race in science and development, and that will speed it up. So hyper innovation means innovation squared or even bigger and bigger than we've ever seen. So I think when somebody is born today and by the time he or she is 30, he will have a world or she will have a world that we will probably not recognize anymore. And that's absolutely exciting, but also probably scary.
Yeah. Especially, as you said, with all this competition between the US and China, it can only be a good thing really for in terms of advancing the technology, because the more people that are working on it, the more incentive and the more money that's spent on developing it. But what's your views on potentially the geopolitical issues of this hyper innovation and the race between maybe China and the US and Europe?
Well, it's not going to help things in the sense that the fact that they're going to go heads on and everything that's innovation and technology will mean that you will get, in a way, two separate worlds with separate standards, with other technologies. And Europe, once again, finds itself in the middle of it, because at a certain moment in time, you will have to choose whether you're going to go for the American standard or for the Chinese standard. But if you talk geopolitics, it's way beyond innovation, it's way beyond technology. That's one very important part of it. But also, it's in a way generational. And they always say if you steal from one person, you can go to jail. But if you steal from 100 persons in terms of ideas, you can call it research. So we did a lot of research in our book. We've mentioned quite a bit of different books. And one I particularly like is A Fourth Turning is Here, written by 𝗚𝗏𝗏. And it's an update of a book that was written 30 years ago by 𝗚𝗏𝗏 and Mr. Strauss, who unfortunately passed away. And back then it was also called The Fourth Turning. And what we're living through, and also with Donald Trump, and then what you see all over Europe and in the rest of the world today, it's clear that we're in a fourth turning. And what's a fourth turning? Well, unfortunately, because this is not a happy story, in the short run at least, a fourth turning is a period of very big conflict, wars between countries. Think about Ukraine. Think about the Middle East. Let's hope not the Far East, that nothing funny happens around Taiwan, for example. But that are the kind of things that you would expect in a fourth turning. And also within countries, and there it becomes very visible, is that whoever is in power, whether on the left wing or the right wing or up or below or wherever, they lose. The incumbents lose. So in my mind, it was not a big surprise that Donald Trump won everything, the Senate, the House, the presidency, everything, because that's exactly what you expect in a fourth turning. And the point is that a fourth turning is extremely tribal. Everybody goes back to his own tribe, his own country, his own village or his own province or so on, and you start to work in that environment, but you're not necessarily worried too much about the world as a whole. And the big idea behind the fourth turning, and that's, I think that's a stroke of genius by the people who have come up with the idea, who have coined the idea, is that four turnings together are always 80 years. And if you look at American history, there is always about 80 years between big conflicts. And they take the First and the Second World War as one conflict, but then you had the Civil War and the Mexican War and so on. It's always 80 years. And the idea is, when you've had a war and you have had all the destruction and all the horror that goes with the war, well, typically then they say, we're never going to do that again. And we start to build the United Nations and the NATO and then the Health Organization and the WTO. So you build all these organizations, but then after 80 years, a lot of people who have lived through the catastrophe, they're basically dead or are very old, and then people forget and you start again. And what you see today is that Donald Trump, but also others in the world, are just taking down the old structures of the previous world. All these organizations that were built to work together are taken off the table, and or the next generation, or children or grandchildren, basically they will have to rebuild that, and that will be a first turning, and then things will be better. But the good news, because this is not a happy story, and that's not something you want to read. The book is not a book by 𝗚𝗏𝗏 that you want to read at the swimming pool. You do not want to read it under the Christmas tree. It will depress you. Halloween is a good moment today in Belgium when it's raining, when it's cold. That's a good moment to read that book. But the good news is, and you hinted to that, and I think that's a very good question as well, in these times of conflict, when you have wars, when you have COVID, when you have all these problems, when you have two blocks fighting each other in a way, not necessarily with guns, but with technology, well, development typically goes faster. So this is in a way, with all the problems and all the nasty consequences, this is very good news for innovation.
Okay. That's a good segue as well into multi-globalization. I wanted to talk to you about, I think that the trends have been over the last, long time, maybe over the last 100 years, is about a move into more kind of globalization, as we've mentioned previously. There seems to be a bit of a trend at the moment where things are starting to go into either kind of regions or more country specific policies, etc. How do you see that playing out over the long term? Can you see kind of a breaking up of this multi-globalization concept?
Yeah, indeed. And it's very much, of course, connected to what I previously said. In a fourth turning, you would expect that. If you take it one step further, and we come from a world after the Second World War, okay, you had the Cold War between the Soviet Union and the United States, and both had their blocks and so on. But then the Soviet Union fell, the Berlin Wall fell, and the United States was the sole superpower in the world. You had to say it in Latin, you used to have a Pax Romana, a peace under the Romans for a certain moment in time. Okay, the Romans were dominating the world, but there was peace because there was nobody challenging Rome. So we have had a Pax Americana, where the United States was the only superpower. They used to police the entire world. They made sure that all the seaways were safe. You could do trade. You could do all these kind of things. And today the world has changed. You have moved from a unipolar world to a multipolar world. You have China. You have Russia, which is not an economic power, but still a military power. You have countries like in Mexico. Okay, we'll have to see what happens with Mexico with Donald Trump now. You have in India, you have Vietnam, you have Bangladesh. You have some countries in Africa that manage to thrive very well in this new world order. You have Europe that clearly should speak with one voice, but exactly speaking with one voice is extremely difficult when you have a fourth turning. So you see all these different blocks developing, and this has huge repercussions for financial markets as well, because the geopolitical uncertainty, the geopolitical volatility will create volatility in financial markets, but also the economic volatility, because we can no longer speak of one harmonized global cycle. Not so long ago, all the economies would move more or less together in recession and expansion. They would have more or less the same monetary policy. So everything would go smoothly up and down, one big globalized cycle. What you see today is that with all the actions that Donald Trump is taking, that's very likely that the US economy will grow faster than the European one. But then you can ask, okay, will we have the same monetary policy? Will the ECB not cut more than, for example, the Federal Reserve? Then if you look at the other side of the world, you look at China, well, they have clearly a balance sheet recession. So economically, they have serious problems. Then a bit further, you have Japan, where inflation is rising, where interest rates are going up. So you have to see this a little bit, I think, like tectonic plates that are moving, but they're not moving again in the same direction at the same speed, but they move in all kinds of directions. And as they start to collide, these tectonic plates, well, you will basically clearly see that there will be a lot of volatility in markets, for example, in the euro dollar or in the dollar against the yuan. So this will create a very volatile environment.
Yeah, because they've always said that when the US sneezes, the rest of the world catches a cold, right? But can you see that kind of changing a bit and detaching as we go into more of a regionalized world rather than globalization? Can you see some big changes between the interconnections of the global economy?
That's an extremely hard question, and I would answer it like an economist with on the one hand and the other hand, or yes or no. But I think indeed, if there is less connection between the blocks, maybe the impact, if something happens in the United States, will be a little bit less if you look at it from an economical point of view. But of course, there is still the connection of the financial markets. And there, the United States is still extremely dominant. The United States, the markets, the stock markets in the United States, for example, are 75% of the MSCI World Index. the dollar is still the reserve currency. The dollar is still the strongest currency on earth, even though you have massive debt, even though you have clearly geopolitical problems, but still everybody wants to be NVIDIA, everybody wants to own government debt, everybody wants to own the dollars. So I think maybe if the world develops like it is developing, and it will be more like a multi-globalization with blocks, and the more they get detached, the less the impact maybe will be of something happening in the United States on the rest of the world. But if you look at the financial markets, I think they're so much interconnected still. You see it the day that the stock market comes down in the United States with 2%, you do not have to look at the rest, everything is down. So I think it will be a while. Everybody is saying, the dollar is going to, or the US is going to lose the status of the dollar as reserve currency and so on and so forth. I do not see this happening in the short run. One worry, I'm a European, one worry I have is that in Europe we've been unable to create $100 billion companies for an extremely long time. It has been 30 years since we have created a company of that size. Well, if you look at the United States, they're creating them almost every morning, a couple of them. So I still think that the United States will be hugely important for the rest of the world.
Yeah, I agree with you. I think it's going to take some time for them to start detaching, if they do at all, especially as we see clear trends, don't we, that when the interest rates start to go down in the US, then Europe, UK, everywhere kind of follows suit as well. And we tend to see a very similar level in terms of inflation as well between the countries. Yeah. Okay, and can you see any economic powers emerging as we move into regionalization? Can you see any countries that clearly have an advantage and that might become economic superpowers?
The most likely or the most obvious one is China, even though they have massive problems at the moment. Like I said, they have a balance sheet recession, so they have had an implosion of the housing market. So that means that what's a balance sheet recession? Well, that's if people, companies, but especially consumers or investors start to feel poor because all the savings were in the housing market has collapsed. So they basically try to rebuild their balance sheet by saving. So it means that, even if interest rates come down, they will not save, they will not invest. So the only way for China to get out of this is stimulate the economy in a fiscal way, because we have seen in Japan that stimulating an economy with monetary means, with interest rates and QE and what have you, does not help very much in an environment where you have a balance sheet recession. They have demographic problems, their population is aging, so they have a lot of issues, but still, China is a force to reckon with, I believe. I think that India is very well placed to benefit in this new world, because the demographics are very favorable. They have this demographic dividend. They have a very young population. They have still massive amounts of productivity they can harvest. So I think they're very well placed. Normally, you would say that Mexico is very well placed as well, but we'll have to see what happens with the walls and the sanctions and the tariffs and so on. Same goes for Mexico, because I think we live in a world where commodity prices will be higher. So countries that have access to a lot of raw materials will benefit. And that's the big question mark, and I don't have the answer to that. But if you look at demographics, once again, look at Africa. Today they have 1 billion people. In 2050 it will be 2 billion. And in 2100 it will be 4 billion. So that will be the only continent in the world where population is really going up between now and the end of the century. I can envision massive cities in countries like Kenya and other places of 20, 30, 50 million people easily. So that could, if it managed well, and I say if because that's a big if, there could be also a big potential. Nigeria, for example, will have at the end of the century about 600 million people. That's the same amount than the entire Europe has. So it's very difficult to invest there because it's extremely volatile. these markets are very often not liquid enough to put money to work. But yeah, if you look at the young population and potential, maybe there is something in there. But I think, and that's maybe a final important conclusion on this topic, I think that we can no longer talk about the world. Let's say 10, 15 years ago, we would say, I'm going to invest in emerging markets, period. And that would be a basket of Turkey, of countries in Latin America, in Africa, everywhere. And they were treated, okay, the emerging markets go up together or go down together. They have all the same dynamics. So we buy a basket of them. I think more and more, and that comes once again back to this multi-globalized world and this fourth turning and so on, we will have to look at a country by country basis. Do they have stable government? Do they have not too much debt? Do they have access to commodities? Do they have access? Are they landlocked, or have they access to transportation means? Are they in which block are they? Are they in the American block, or are they in the Chinese block? So what's their industrial policy? Because industrial policy of a country, once again, becomes extremely important in this world. So we have to look at it at a country by country basis. I think we can no longer talk about emerging markets as if they were one unity, in fact.
Yeah, I agree with you. They all got very different characteristics from each other. Okay, and we're seeing all-time high, I think, yesterday in gold, in the gold prices, and we very recently had all-time highs in Bitcoin. I think it's at 106,000 or something at the moment. What do you think that the behavior of these hard assets, these limited supply assets, why do you think it's kind of playing out like that? What's happening in the economy that's causing people to maybe go towards hard assets?
Well, I think at the end of the day, it's an inflation story and it's an interest rate story. And I think, and that's where we started, the conclusion of the book is that we will live in an environment where both inflation and interest rates will be structurally higher. And that's a world of real hard assets. And I always, when I talk to clients or I do a keynote, I always talk about monopoly to illustrate this. And then people say, where are you going with this? And I'm going somewhere with this. And we have all played monopoly when we were kids, when we were students, with our children, with our grandchildren. And in monopoly, there are basically two scenarios that are possible. The first scenario is, for whatever reason, but most of the time it's dumb luck, somebody just holds the expensive streets, the blue ones, the green one, the yellow one, and also the beige ones, because when you get out of jail, you typically land on the beige one. So it's very nice to have that one. So if somebody holds those streets or most of those streets, well, he wins and the game is over. But we also have been there that it's 1 a.m. It's almost evenly divided. So all the streets are a little bit evenly divided between the players. Just like in real life, the government gives more money to the population than the other way around, because each time you pass go, you get money, you pay some taxes, but most of all, money flows from the bank or the government to the players. So it's 1 a.m. and the bank is empty. There is no cash left. And that's a little bit bothersome because you want somebody to win. It's a game. So then somebody comes with the idea, and very often it's a woman for some strange reason, and they will say, let's make all kind of new papers. We will write 100 and 500 and 1,000 on them, and we recapitalize the bank. So you get another bottle of beer or another bottle of wine, you play on, but you already know where I'm going. 3 a.m, same thing. Money is once again on the table. And the point is, and that's where I want to go with this idea, and to your point, in monopoly, in investments, and in life, it's not so important how much money there is on the table, because money they can print at whatever speed they want. And they will do that, because just to pay all the debts, they will just print money everywhere. And the money that they print is not so different from the monopoly money. But it's not as important how much money there is on the table. It's important who owns the streets, the hotels, the houses. And if you take that reasoning one step further, who owns the Bitcoin, who owns the gold, the jewelry, the wine, the companies, the equities, in Belgium, the pigeons, the old-timers, all the things that are tangible. And in a world where inflation is between 0 and 2%, well, basically, you lose also, inflation is also eating up your cash, but at a slower pace. If you move to a world where inflation is between 2 and 4 and occasionally higher, well, this process goes way faster. So that's something I'm absolutely convinced about. I cannot tell you what the stock market is going to do this afternoon or next week, but we need to own these real assets, because when you're in cash for the next 10 years, you know for sure that you will lose 50% of your purchasing power. So this is absolutely a world where we need to own real assets.
Yeah, I agree with you there. Having money in the bank is only going to erode in purchasing power over the years. Yeah. And in terms of global debt and actually country debt as well, how sustainable do you think it is? Because we obviously have very high levels of debt. It just seems to get bigger and bigger every year. How sustainable is it? And how do they manage between growth and austerity, for example?
Yeah, that will be extremely complicated. And it's a little bit the other side of the same coin. Because if you have this pile of debt, and let's say the United States is 36,000 billion, it's an enormous amount. Of course, it's also a very big country. In Belgium, the heap of debt is smaller. In France, it's smaller, but everywhere, governments are highly indebted. So when you have debt and you could say get rid of it, but you're never going to get rid of it. You could say how we keep this manageable. That's the best thing we can do. You can do three things. You can try to save and grow your way out of it. Let's hope that AI is going to help a bit on the growth side, but on the saving side, forget about it. In a fourth turning, where the extremes win, where the center is small and the center cannot take the measures that they want, basically you cannot sell that to your voters. If you try to do austerity, well, they will even move more to the far left and the far right. So it's not going to happen. Second way is default. Default is typically something you do not choose yourself. It's something that happens to you. There is no magic number to that. Russia once went bankrupt when debt to GDP was 30%. In Japan, they're still not bankrupt, and it's 250%. So there is no magical number where you go bankrupt, but the default is always a possibility, but it's something you do not choose normally, voluntarily. So and it's highly disruptive, of course, for financial markets. So let's hope we not go there. And then there's a third way, and it's not a perfect way, but from all the bad options that are on the table, it's maybe the least bad option that's out there. And you know where I'm going with this: inflation. You let inflation run at 3 to 4%. You try to keep interest rates below that. You try to have a negative real interest rate, and you try to inflate your debt away. And that's the reason why we think that you need to own these real assets. Why I think that, okay, you should not exaggerate, because that's also dangerous, but it's still a very good idea to buy real estate and put a loan against it, because governments and central banks can do a lot of things, but they cannot inflate their debt away without inflating our debt away. So I'm absolutely convinced. There's also something I did myself. I bought for the kids an apartment not far from where I live. I rented it out, and I did it with a bullet loan against my pension plan, because I'm still convinced, even though prices of real estate have gone up quite a bit, that in 20 years' time, I will be way happier with these bricks than I will be with the cash in the bank.
Definitely, real estate is a very real asset. And as we've seen from historical data, prices have continued to go up. You might have your odd blips from year to year, but prices have continued to go up throughout the decades in most European and US places. Yeah. I wanted to go on and talk about aging population now. Obviously, we've got a very low birth rate that's happening at the moment. It used to be that families had 2.4 children, I think was the saying, but that's come down quite dramatically now. And we have an aging population where we have a lot of old people in the countries that are maybe not working and maybe not providing productivity to the countries. How can you see that playing out, and which areas do you think are most affected by aging populations?
Well, we will all be affected by it. And I think that just like with AI and all the other things that we discussed, it will bring about quite a bit of societal, philosophical questions about how we're going to cope with this. But it's clear, and I strongly believe in the longevity story. I think that people who are born today, they will live on average until 100 years. Well, then the question is, can you retire at 60 if you know that you're going to live until 100? So it means that you are 40 years that you live off your savings, or that the government has to support you, or what have you. So we will have to find new ways to look at this. And we can be optimistic because in a way we have to find new ways in terms of mentorship and so on to get a larger and ever larger part of the population, to get them to be more productive for a longer period of time. And it does not mean that you have to work until you're 100, but you could teach, you could mentor, you could do things. I'm a very big fan of that. In the book, we have a career, that's a word that you use, but career, I once again go to Latin. Career is derived from carus, and carus means car. And the idea of a career is driving from point A to point B to point C. And we have changed the word, we took a new word, and I would call it transitier. And the transitier would then come from the Latin, once again, transitus means going from one place to another again, but not necessarily in a straight line in the same direction. And if we're going to be 100 years old, so or the time that we work will be 50 or 60 years at a certain moment in time, you can imagine that you have more careers because the world will change so fast that basically you will do different things. And also, you come in a world of lifelong learning. I think that everything that's connected in AI or in education or what have you, where you basically you will have to find a way to keep these skills developing. And when we're very optimistic about AI, we could say we could have some sort of a AI companion mentor that basically helps us with a totally different way of studying and so on. So if we try to invest in this, and there are a lot of funds that are called Silver Age, but most of the time it's all about playing golf and cruises. That are the two stocks or the two groups of stocks that have always been there. People who retire while they play golf and they go on a cruise. And that will be the case, that will happen, but we will have to look way broader than that in education, in fitness, in another way of housing, co-housing. So there are, I think, an enormous amount of possibilities to invest in this trend. But once again, just like with AI, the most important thing is that this is a change in mindset. And it means that we will have to reorganize society in a totally different way as today. And that once again, sorry that I keep repeating myself, but that will once again in a fourth turning be extremely complicated, because in the fourth turning, working together is always a very difficult thing.
Yeah, I think people will have to work for longer, but they will also probably have a longer amount of retirement years if people are living to 100, and probably quite importantly, healthy retirement years as well, when they're at the most healthy before old age creeps up on people. Yep. Okay, and in terms of filling the gaps of jobs, so if we've got an aging population, we've got less younger people to take jobs, etc. Do you see the main solution to that being immigration, or be it you're actually stealing from another country to bring into your country to drive more productivity?
Once again, a very complicated question, and with different angles, but no easy and simple solution. But indeed, in a way, you will have to find young people to be productive, to help you. You will have to find a way to keep the older part of the population productive as well. You should, in a way, incorporate probably AI and productivity as well. Now, once again, in terms of investments, this has also a profound impact, because if you look at this today, with the globalization, when we were able to outsource production to India, and then the factories were built in China and so on, well, that was deflationary. But if you bring production back home, that's in a way inflationary, because your supply chains get shorter. You are maybe not producing the most efficient way because you want to produce it under your own church tower. So that's very important. So that will be inflationary. And also the fact, if you looked at the previous world, the world before COVID, well, if you look at the added value, shareholders used to take a lot of the added value, because the workers did not have a lot of bargaining power. That's going to change if skills and skilled labor becomes scarcer and scarcer. Their bargaining power will increase as well. And like I said, I've been doing this now for 30 years. So I'm at the moment that when I hire new people in our organization, they have the age almost of my children. So that proves that you're slowly but certainly getting old. But negotiating with these guys, that's not easy. Right? It's like a reverse solicitation or a reverse interview. Before we used to ask, okay, what can you contribute to organization? Why would I hire you? Now the question becomes, why would I work for you? And you have to convince them. So, and after 2 years, when they're not happy with the salary, with the car, what have you, they're gone and they look for something else. And they're very mobile. They go from Madrid to Copenhagen to Brussels to wherever. So the bargaining power of this new generation is increasing. So that means that they will take a larger part of the cake back home in terms of salary. But that means that the margins of the companies will be under pressure. And if the wages go up, well, it will also be inflationary. So a lot of things are pointing, changes that we see are pointing to a world that will be way more inflationary than we used to know.
Yeah, I agree with you on that. I think it's probably a very employee-powered market at the moment, as you have less and less skilled employees at the right age to be able to take up those roles. Okay, last thing I wanted to talk about before we wrapped up was climate and energy. Obviously, there's a lot of drive at the moment towards sustainable energy, whether that be wind power, solar, electric cars, and many other industries like that. What are some of the impacts on the environment from some of the core things that are happening in the market? So, for example, from oil and other petrochemicals, how do you see the future of sustainable energy playing out, and what do you think will be some of the important factors?
Well, I think that's extremely important. I think, the climate is changing and we have a lot of challenges there. On the other hand, it's also clear that all these new technologies like AI and so on will use up large amounts of energy, more than ever before. If you do a Google search or you do a ChatGPT search, ChatGPT is about 30 times the energy that you consume for a Google search. It's 27 or 28, but it's almost 30. So that's huge. These data centers, if you have a data center of a decent size, that's the equivalent of 2 million people in energy use. So a lot of these things, the world will need a lot of energy, and preferably cheap energy. And then the question is, where you're going to get it. And I still think part of it should be nuclear. I think there is a nuclear renaissance going on around the world. I think that's going to happen. But we will need all of it. We will need some conventional, but we will also need the solar and the wind and the hydrogen and the biomass and whatever we can get our hands on, because we will need it. And therefore, and maybe you will not get the impression, because I have been talking about opportunities, but also about risks and about challenges and about a complicated world. But our book, the New World Economy, is basically an optimistic book, because when I sign books, when I do presentations or keynotes, I very often write this world needs less prophets, but more wizards. So people who are saying, okay, the climate is going to change, we're all going to drown, we're all going to die, there is no solution. Well, that's not going to help. We need wizards who invent the new batteries of the future, who invent the smart grid, who come up with solutions to make this total energy complex, and preferably the renewable side of it, more competitive. We absolutely need that to power all the rest, to power the world. So that's hugely important. And then as a bank, we're BNP Paribas Fortis, we're very much behind this idea of the transition about the better planet for our children or grandchildren and so on. But we have to do it in a realistic way. We have to find a way that we do not hurt, grow too much, that we do not make the cake smaller, because then you get all other geopolitical and political problems again. So that's key. And there, innovation is really key. And also, if you look at the mining sector, for example, mining is not the most environmentally friendly sector that you can imagine, but when you talk to these people in Vancouver and other places, well, they do real efforts to make it better, to drill less holes, to find ways to power these mines through solar or to other things. But if you want an electrical car, if you want a solar panel, if you want these things that we all want, basically you need cobalt and lithium and copper and so on. So that's also one of the main conclusions in the book. Once again, from an investment point of view, I believe that there is going to be a massive super cycle in commodities. And last year it was a little bit difficult because China's economy was weak, dollar was strong, interest rates were high. So that's not a good environment for commodities. But eventually you will have not enough supply in a lot of these things to meet the demand. And therefore, once again, I absolutely believe we should do this transition, but we should do it in a smart way. And then you need the commodity space and you need innovation. And then we will get there. And then the young wizards will hopefully find a way out of this without us all drowning or all dying.
Yeah. I think it's likely to be gradual. I think a lot of people expect things to move super fast, but it takes a while for it to get into the psyche of the human population. And you've really got to balance it between making steps towards sustainable energy and what makes sense from a financial point of view, right? So you've got those ethical considerations and those financial considerations over how quick you move to sustainable efforts. How do you think countries can balance that between looking for sustainable energy in order to be good for the environment and also making it economically sustainable?
Well, innovation is always the key, but we keep turning in circles because we always get back to the fourth turning situation. A lot of the challenges that we face in terms of climate change and so on are global. So you should be able to tackle them on a global level. But exactly that becomes difficult. And with the United States pulling out the Paris Climate Agreement and so on. So it becomes extremely difficult for Europe, for example, to deal with this environment. And what I think is that if you want to go ahead as Europe with this climate change and you want to finance all this innovation and everything that will initially cost a lot of money, you would probably need to do the financing also on European scale, and a unified European debt market where as Europe you can emit debt and use the debt to finance investment and so on. I think that's also very important. Once again, that's also difficult in a fourth turning to make all the countries in Europe see eye to eye, but a lot of the challenges that we have in demographics, in debt, in climate change and so on are global. So we should try to tackle them on a higher level, but I'm realistic enough to know and to understand that this environment that will be extremely difficult. And as long as you go on a country level or a company level, I think you're right in the sense that it will go slower than people think, and that it will probably go too slow. But yeah, that's probably the way it's going to be.
Yeah, it's quite a hard selling point at the moment to think about sustainable energy when you've got the US saying drill, baby, drill. And then you've got China, who have obviously produced a lot of coal and other dirty energy sources. It's quite a hard sell at the moment to be able to say to Europe and to other countries, we expect you to do this, but then the other countries aren't doing the same thing.
Yeah, that's absolutely correct. And the only way to solve this conundrum or this paradox, or whatever you want to call it, is make sure that the alternatives are more competitive than the traditional ones. And then you have a business case to do it. But to get there, of course, you need a lot of innovation, and we're still not there. And I still think, I've already said it, that nuclear is in a way a no-brainer. So, and more countries around the world are catching with that idea.
Yeah, totally agree with you on nuclear. I think it's the future. Okay, excellent. And Philippe, how can people find out more about you? Where can people find your book? And where can people get a bit more resources and things on your commentary?
Amazon, Barnes and Noble, so a lot of the networks. It's available in Dutch, in English, and in French. So wherever good books are sold, I would say they're available. I'm on X, but I'm mostly on LinkedIn, and I publish on a very regular basis articles, ideas, quotes, and so on LinkedIn on a daily basis almost. As you can see behind me, I'm a big fan of books as well, so I very often look at books, I make comments on books. So I even had a reading challenge where I read one book a week for 1 year and so on. So all these things are on LinkedIn, so everybody is very much welcome to join us, our community there, because the reason to write this book, you asked at the beginning, is that we thought the world is changing and that we need new logic. I've written it together with my friend and colleague. But as you will see, the pages are sometimes in a different color. I have the blue pages, he has the white pages. So we agree on the big lines, but we do not agree on everything. So it's a discussion. And that's also what it is. It is an invite to other people to join into the discussion, because nobody knows how the world will look in 2050, but we can all try to come to some sort of understanding. And in financial markets, you can make money if you're a little bit better than the consensus, or you're a little bit less wrong than the consensus is, because we know we're all going to get it wrong, and the future will be totally different than that we expect today. But that's just the fun part of it.
Yeah, I think that is the most fun part, the future being uncertain and having to try and navigate where you think the markets are going to go based on thesis. That's the fun of it, I think. Yeah. All right. Excellent. Well, I've really enjoyed talking to you today. Had a really great interview. I think the audience are going to learn a lot from this discussion. And I really hope that you can come on the podcast sometime in the future and then we can talk some more.
Absolutely. Thanks for having me. It was great fun. Thanks for your insightful questions. You've asked some things that people have never asked me before, so it's always fun. So thank you very much for your time, and let's be in touch.
Thanks very much, and I'll leave all the links to be able to get in touch with you below.